Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. So first of all, I hope you all had a fantastic Christmas and New Year's, and what a week it has been. So we've just actually seen gold off the open break out to 6-year highs, something that we have discussed in detail on numerous previous reports as well. As you no doubt know, we are long on gold at the moment, so we've essentially seen a 300-point breakout off the open, where gold closed at $1,550 per ounce, and it spiked up to $1,580. And not only that, we're also still long on our palladium trade, our silver positions. So going into a new week here, things are looking very interesting, and I hope many of you have really capitalized on this. We've definitely done our best here to make sure that you're all clued up on the current moves that we have been anticipating in the market, especially over the festive period, where typically this, of course, is where we do see the precious metals get that safe haven bid, but also very strong seasonal plays as well that many of you are aware of, where typically gold, silver, platinum, palladium, they have some of their best performance at the end of December, then into January and February, especially when a lot of traders are away. And in those 2 weeks at the end of December is typically where gold can have a really strong, stellar move. So it's been very interesting now to see gold break above those 6-year highs. Now, I did mention previously that we have 2 positions running. Those 2 positions, in fact, are up almost 1,000 points each as well. And we're also continuing to hold onto our silver trades, which are up over 350 points, and palladium, which is up 1,500 points. And of course, many of you have been following this. You've been following the analysis week to week. You know what our positions are, especially if you go back and just watch 3 weeks ago, all of our predictions for the metals going into 2020. We've essentially come very close now to palladium breaking out to $2,000. We've actually hit on platinum $1,000 per ounce, banking us, in fact, 810 points last week. We had predicted that gold prices would get to 1,600. That's, of course, when the gold prices were trading closer to 1,470 that we were forecasting for 1,600 gold, and now we've broken out to 1,580. Now, a lot of this over the last 48 hours or so has, of course, really been spurred on by the safe haven play here, with gold racing past that $1,550 per ounce level after the US airstrike in Iraq, killing the commander of Iran's elite force, prompting a rush into safety assets. And of course, no doubt you're very aware of that, the geopolitical risk, which has escalated intensely over the last few days, especially over the weekend, and this is likely to be the case here as we continue throughout this week. So with that, let's actually go right over to the charts. We'll talk you through it. So gold has essentially gapped up on the open. It broke out to $1,582 per ounce. Very quickly, in fact, we started to see some profit taking off the back of that, retracing back down to $1,566 per ounce. What you'll note right now is there is a gap to fill. We do have some major news items which are coming out later on in the week. One of those, of course, is Friday's non-farm payroll. My expectation is that between now and the end of the month, we will tap 1,600. But we're likely to get some back-in filling here. And of course, because we've had a fairly significant gap in the open, you want to watch out for, over the course of this week, this gap essentially getting filled. Once that gap has been filled, likely we're then going to look for buy opportunities after that resolution, and depending on really where the geopolitical risk is at that point. We want to really see how this plays out over the course of this week. But at the moment, given that we've had such a significant breakout right off the open there, you're likely just to see that normal profit taking that does occur after such a significant gap like that. 300 points higher is where gold has managed to tap on the Sunday through to Monday. So it's likely you get some profit taking, a bit of retracement, and then what I would look to do over the course of this week is essentially look to capitalize on this movement. So if we were to get a gap fill back down to support, then look at buying evidence essentially back at that previous level of resistance around the 6-year highs, of course, again around the 1550 level. And then if we get well supported at that zone, that could be certainly an area to look at for just opportunities to buy if we do see support at that zone. Of course, if you've got long positions on and you're continuing to hold those trades on that spike off the open, some of you may have wished just to bank some partial profits at that point and then look to just lock in some of those gains that you've had recently. As I mentioned, platinum has really been a stellar performer for us as well over the last couple of weeks. We hit that $1,000 level just last week and also banked 810 points automatically. On palladium at the moment, we're up over 1,500 points on this position. That worked perfectly. We identified that with you as well a couple of weeks ago. We'd had that big sell-off in mid-December, and then we had that retracement higher, broke out from a bull flag, and really that just continued to creep up throughout the festive period. So really the trick here to understand each year with the metals at this specific time from mid-December through to beginning of January is often you get this mid-December pullback, which occurs around the FOMC statement, the European Central Bank announcement. This year we also had the UK elections, and we also had the trade tariffs between the US and China. But many traders were getting just really too bearish out there without much understanding of how the cycles operate within the precious metal markets and what great opportunities there are to be had over this period. This is where in mid-December we saw these pullbacks, many traders getting really bearish, looking for 1400 gold or 1430, 1418 and so forth. We saw many predictions out there for large scale sell-offs taking us down to these major levels of support. Before then we may get a bid for gold, whereas we continue to buy and stack positions all the way between that 1465 up to the 1478 handle. We built 8 positions at that zone, and we've just seen it absolutely be on a tear since then for gold. Silver as well, as we mentioned before, we built positions from $16.60 per ounce and also sub $17 we still liked for a buy. We've got 3 positions on that which we maintain at the moment. Obviously the price at $18.17 right now. We're up over 350 points on those 3 trades. We'll continue to hold those trades. What I do like at the moment is of course the weekly chart. Higher time frames here where you've seen this significant breakout of the bull flag. We've more specifically not only on silver identified that, but gold. Gold is the one that we've really kept our eye on here day to day and just managing the trades, and with the expectation that we would get this breakout of a bull flag. We saw that developing quite some time ago, the potential to break above it during the Christmas and festive period. We had a nice breakout to the neckline last week, an additional breakout really over the course of the last additional breakout just on the Sunday open as well, which has pushed us above the 6-year highs, the swing highs here as well, and that's just worked out absolutely perfectly for our positioning there on gold. I'm sure many of you have capitalized on this from the messages that we get on YouTube, and it's great, by the way. Thanks to all of your feedback and all of the messages that we do get at the Gold and Silver Club. I'm so pleased that so many of you have capitalized on this and you haven't been snoozing over the festive period, or you have but you had your positions on beforehand, so you were able to capitalize on these moves. And definitely the worst thing you could have done over this period would have been to short gold, silver, platinum and palladium. That's an absolute no-no from mid-December. So I'm sure none of you have done that, but it's just been an absolute phenomenal run here on the precious metals over the last 3 weeks now. Now moving over as well to the crude oil market. So it's been interesting as well. We have gapped up on the open for crude oil. I'm looking for resistance around the 64.50 level and support essentially to come back down to around the 62 zone. So you can see again we've gapped on the open. There is potential for us to pull back here on oil. Obviously geopolitical risk is still very forefront at the moment, so you really need to take that into account if you go for any sell shorts on oil, that any sort of breaking news items with escalation in the Middle East could very quickly see oil catch a bid. But otherwise I would be expecting the potential for a retracement and taking us back to approximately the 62 level over the course of this week, and then 64.50 resistance around that zone. 64.50 to 65 essentially I'm looking for, so range bound within those sort of levels, 62 to 65 as we go into next week. With gold, in fact, going into next week as well, we did have a significant gap on the open, over a 300-point move. We could still come back to revisit the highs here and come back to around 1585. As many of you know, we're ultimately looking for 1600 over the run-up of this move that we've seen so far. From mid-December, I am looking for a high to get put in at least 1600, if not higher than that, over this period of bullish momentum that we're seeing with gold. But short term, because we have seen that big gap on the open, you want to watch out for the potential to retrace back to the 1550 zone, then look at buying evidence at that zone. If there is no buying evidence and we do see a pullback and a correction at that point, then obviously you want to just hold, pause, see what other major news items might be playing out. We have non-farm payroll, which will be later on this week as well. It's possible that we could have a more significant pullback, because what we're seeing now is all of the traders who missed the move over the Christmas period that we've been identifying for you and discussing time and time again, that it's a great time of year to capitalize on the gold, silver, platinum, palladium trades. Now that many traders are coming back from their festive breaks, they're going to see these big moves on the precious metals, particularly gold, and very likely they'll FOMO in and get in too high. And it's just something to be aware of, that we might start seeing traders just trying to get in too high. They've missed a lot of the move, which I'm sure many of you didn't. I'm sure you managed to capitalize on these moves, but there are going to be a lot of traders who now start to FOMO into gold too high, and as as a result, they may get punished for getting in too high and not taking advantage of all of these opportunities that we've had now over the last 3 weeks on the gold market. So again, I'm really pleased that so many of you have been able to capitalize on these moves. If for whatever reason you haven't, and you're only getting back to the screens now and you're looking for fresh opportunities with commodities, with the precious metals, with crude oil, and you would like a further edge in your trading and really make sure that you're starting 2020 on the right foot and you're not using these outdated technical strategies which just don't work in today's market conditions. In 2020, you want to make sure you have an edge in your trading where you're taking into account market intelligence, trading research, cycles in the market, seasonality, fundamentals, trade flow, what the hedge funds and money managers are doing versus the retail traders. All of these will build up a research-driven approach to your trading and give you a much better edge. So if you would like to become a member of the Gold and Silver Club, there is an opportunity for you to do so. As a member of the Gold and Silver Club, you get access to our exclusive live trading room webinars, as well as real-time trade alerts, real-time trading research and market insights, access to our private Members Academy membership site, and also support and one-to-one mentoring. For more information about the service, please visit www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.